Hey there, it's Bill with Smart Trades. It's Sunday, April 17th around 4:40 p.m. And here's an update of the S&P count that we looked at a few days ago. If you'll remember, we had labeled this 1, 2, 3 down, and indeed it looks like we've got wave 4 and wave 5 of 1 of C to the downside. On the cash chart, it's not a perfect count. It looks a lot better in terms of the close only chart. Here we have the 480-minute futures close only, and you can see a small wave 1, an ABC rally, 5 waves within 3, alternation in 4 in that it's not as complex as the wave 2, a 5th wave down, and then what looks like an ABC back up. The bottom line is that we have what looks like an impulse to the downside, a correction back up, and that fits with our longer term scenario. And here indeed is that chart. This was first posted several weeks ago, at least this projection I should say, of an ABC down. And C now, I've updated this to show the approximate date that I expect C to bottom, which would be around the end of April, April 26th to be exact. In the 1240, 1250 range, you should make a moderate new low in C, but we'll have to watch that unfold and update it as we get more data, but that's the basic pattern. We had looked for 1344 to the upside. We didn't quite get there. Just below 1340 was the actual high. So that 1340 area is important in terms of this so-called wave 1 down. If we take out 1340 or so, it's actually just a little bit below that. That would bring this scenario into question. It's possible it could still work out in a more complex B wave or irregular expanded flat type pattern. But the bottom line is the way that we're calling for it now, we should see a fairly swift decline down again under 1250 towards the end of the month. Switching gears a bit, here's the dollar index. And as you can see, the dollar index has been consolidating and drifting slightly lower at a new low, but just above this wedge pattern trend line. Now it's possible this is a consolidation. It's also possible it's a basing pattern, and this is a bit more of a close-up. And the kind of thing that I would look for here, if indeed it's a base and we are going to reverse, I wouldn't buy it here. I would look for it to reverse back through this pattern and perhaps start testing from above the 75 area and then the 75.20 area, which would be a breakout of the top of this pattern. But for now, I would take it one step at a time. It's almost as likely that this is a consolidation and may break to the downside. So what we're looking for here are clues as to which way it's going to break out of this pattern, and then look to play those. Just the opposite is true with the euro. Around 143.50, you would have a breakdown of that consolidation pattern. You want to test that from below. Ideally, if you're looking for a reversal, and obviously on the other hand, if we break through 145 or so, it looks like a breakout to yet higher prices in the euro and lower prices in the dollar. Along those lines, and I think these are related, crude oil shaping up here with a possible diagonal triangle type peak. We've got a ABC of 1, wave 2, and ABC of 3. It's possible we already have a peak in here, as I had mentioned the other day, but looking at this pattern and looking at the resistance up here around 115 up to perhaps about 118.50, I'm starting to favor slightly the scenario that this is a diagonal triangle and it's going to peak up in that area. This count would be blown out around 122.50. 122.50 would produce a 5th wave longer than 3, and that breaks the wedge scenario. In fact, if we go through about 119 or so, I would be very doubtful that indeed this is a diagonal triangle. So we've got a limitation on the upper end of what to expect, and if indeed it does form a diagonal triangle, the reversal could be pretty sharp to the downside. And gold. Gold is following a somewhat similar pattern. It's not a diagonal triangle, but it is a sort of wedge-shaped pattern, and we are up against the top of that wedge here on a 240-minute chart. Now, once again, if we blow through the top of that wedge, then obviously the wedge won't be in play. But for now, we are right there. It's worth watching. I'm not calling for a top per se, but I'm watchful when I see these types of patterns. And as you know, we had similar type patterns in the stock market right before we had the last sharp decline. So when we head up to the top of a wedge, when you're losing momentum, volume isn't confirming, it's worth watching. Bonds, as I had mentioned, we're heading for a potential short-term low. I think this entire pattern is corrective. Here are a variety of swing lows at a similar price point, around 118 basis the June bonds. And indeed, we bottomed right there, at least short term. We'll see how far it goes. Again, the scenario I'm looking for is that this is a B wave low, perhaps, and that, or some kind of complex correction. We've got higher prices, but in the context of a corrective rally, I don't think we're going to take off to the upside in a major way, but we could work our way a bit higher. And here is natural gas. I had talked about this is actually the old chart of the natural gas, and I had talked about the possibility that we had a 1-2 type pattern forming in natural gas, and that the bottom of this small wave 2 would be a buy. In fact, I'd like to talk a little bit about the nature of how to know you're in a wave 1. I've read elsewhere that Elliott doesn't talk very much about the definition, how to define a wave 1 pattern. I disagree with that. I think that intrinsic in the theory, or the principle I should say, is that the idea that a wave 1 needs to be an impulse. That in and of itself gives you an idea that you have a change in trend. If you've been going down for a bit and in a downtrend or a sideways consolidation, and then you get a obviously impulsive rally out of that consolidation or out of a downtrend, then you have what is likely to be, or at least potentially, a wave 1. And then furthermore, you want to look for obviously a corrective decline that holds above the bottom of wave 1. By definition, you're not supposed to take out the bottom of wave 1 on the corrective decline of wave 2. And in our example here of natural gas, we've got 1, 2, 3, 4, 5 up. We've got A, B, C, B, and then a rather wedgy-shaped C wave for wave 2. And the key here, you never know for sure whether or not there's a change in trend in a market. There's no way to know 100%. What you do know, and what Elliott does help with, is helping to define where your risk should be. And in our case here, if you had followed my advice on the last report and looked at this as a small 1-2, 1-2, you could have placed a stop just under this small wave 2 at 405, or given a little more room at about 398. If you had bought in here, that gives you somewhat under a 10-point risk, or about 2.5%. Now, what's the potential of the trade if indeed this is correct? I would say it's back up to the top of this pattern, around 840, 850 or so, or about a 100% return against a 2.5% risk. Now, to my way of thinking, if you can trade with 2%, 3% risk and have 100% potential, even if you're less than 50% correct, you're going to have very good returns. And that's the idea, again, behind what Elliott provides in terms of determining whether or not you've got a 1-2 or a change in trend, if you prefer. And it gives you a definition on where to place your stops, where you're going to be wrong. And on that note, let's look back on the dollar again. And if you remember, I thought that we might have had a bottom in here, but as the pattern progressed, we noted an ABC rally. And this is a case where Elliott lets you know when you're wrong. And I think this is very valuable information. At that point, I had noted that the 75-70 area, the bottom of the B wave, would indeed break this pattern. And I think even as we got up into the 76.50 area, it became apparent that we were possibly in an ABC, and at that point you want to start to protect your position if indeed you're long and thinking this is a bottom here. And again, as we broke through 75.70, and there is some pretty clear smaller scale ABCs to the upside, you had ample opportunities to limit your risk or indeed take a very small profit. Anyway, that's about it for now. Hope you're having a good weekend, and good luck in the week ahead. Thanks again for watching. Bye-bye.